Hello, and welcome to this short lecture video on the closing process. The closing process is one of the last steps that we're going to take in the accounting cycle, and I think it's helpful to look at the expanded accounting equation when we're thinking about the purpose of the closing process. The whole purpose of the closing process is effectively to move the balances in these three accounts, okay, into equity. Okay, so we want to move revenues, expenses, and dividends into the equity account through retained earnings, and that is exactly what the closing entries are going to accomplish. So, we are going to begin by making closing entries to revenues and expenses. And we're going to move them into a little temporary account that we call the income summary. We only use this income summary for the purposes of closing entries. It's not something that you're ever going to see on the financial statements, but we're going to move revenues and expenses into the income summary, and then we'll move those into retained earnings. And then we're also going to close the dividends or the owner withdrawal accounts and also move that into retained earnings so that revenues, expenses, and dividends effectively disappear and are consumed into retained earnings. And this accomplishes two important things. First, it gets retained earnings to the correct balance where it needs to be, but it also zeroes out these accounts. It zeroes out revenue, it zeroes out expenses, and it zeroes out dividends so that those accounts are ready to start the next accounting period with a zero balance. So, let's look at the steps that we're going to follow. Step one, we are going to close revenue, and we're going to do this. Remember that revenue carries a credit balance. So we are going to close revenue by debiting the revenue accounts and crediting the income summary accounts. Okay, and that effectively closes revenue, moving it into the income summary. We're going to use the same process in step two for the expense accounts. They carry debit balances, so we're going to close those out by crediting each expense account, and then we're going to debit the income summary account for that total. At that point, all of our revenues and expenses will be sitting in the income summary account. So now it's time to close the income summary account to retained earnings. And lastly, we will close dividends to retained earnings. So let's quickly take a look at how this is going to play out, okay? First, we're closing revenue. Now, this is something that I always tell students when you're thinking about, if you get confused on how to close revenue, expenses, or dividends, okay? Remember that our goal is to make the balance go away. Okay, so if you're trying to eliminate an account that is carrying a credit balance, how are you going to eliminate that or make it go away? You're going to debit that account, and that is exactly what we are doing here. Okay, we are going to debit revenue for whatever balance it currently has as a credit. We're going to post a debit, and that zeroes it out. And then the offsetting credit goes to the income summary. So this entry here effectively moves revenue into income summary. Now we're going to use the exact same process for closing expenses. Now, I just have some examples of expenses here. The expense accounts are going to vary, but you kind of see what this entry is going to look like. Again, all of these expense accounts are carrying debit balances. We want to make them go away or zero them out, so we are going to credit them for whatever amount they are currently carrying as a debit balance. Okay, when we post that credit, it makes it go away. Now, remember, our total debits and total credits have to be equal in any journal entry. So this total debit amount is going to be whatever, didn't mean to do that. This total debit amount is going to be whatever's the total of all of these credits put together, okay? That's the amount that's going to be debited to income summary, okay? So at this point, we've moved both revenues and expenses into income summary. Now it is time to move income summary into retained earnings. Okay, now, assuming that the company has a net income for the period, that means assuming that revenues were greater than expenses, the income summary account is going to have a credit balance, meaning that our closing entry is going to look just like this. We're going to debit the income summary account for whatever the credit balance it's currently carrying, and we're going to move that into retained earnings. Retained earnings is an equity account. So when we credit retained earnings, we are increasing that account. Now, interestingly, if the company was in a net loss position, meaning that their expenses were more than their revenues, then the income summary account would have a debit balance instead of a credit balance. If that happened, this entry would be exactly the opposite of what it is here, okay? If the company had a net loss instead of net income, then we would be debiting retained earnings and crediting the income summary, okay? We hope that that doesn't happen very often, but it does happen from time to time. And our very last step is going to be to close the dividends account. Remember, dividends carries a debit balance. We're going to credit that to make it go away. We are going to debit the retained earnings account, which carries a credit balance. So when we debit retained earnings, we are reducing the balance in that account. And that is the last of our closing entries. We are now ready to prepare a post-closing trial balance. And what you'll notice about a post-closing trial balance is you should only see assets, liabilities, and equity, okay? It'll essentially look like your balance sheet, okay? A post-closing trial balance is going to only have your permanent accounts, that is your balance sheet accounts. Thank you so much for watching this video.